Still on our market structure, I'll be taking our time today to explain how to physically identify a valid market structure in the Forex market. Now, understanding a valid market structure will help you improve your win rate and also help you avoid losing trade. So make sure you stick to the end of this video so you can understand everything I'm about to teach you. So a valid structure can be based off a break of structure. You heard me right. So market structure is of three types. We have the uptrend structure, we have the downtrend structure, and we have the ranging market structure. So if this is your first time of hearing about market structure or watching a video about market structure, make sure you check this video here, because this is an introduction to market structure. Check out this video before you come watch this video. All right. So market structure in an uptrend is simply structures creating series of higher highs and higher lows. Well, what you don't know is for an uptrend structure to create a new high, a break of structure needs to occur. So it's known as the boss, okay, which is BOS. So like this. So a break of structure needs to what? Occur. So the validity of a structure is how much you see a break of structure. All right. So the validity of a structure is how much you see a break of structure. So what this means is the more break of structure you see in a trend, the more valid the trend is. So if price should come into the zone, okay, level, and create a break of structure, the more valid this structure is to continue buying. So what is break of structure? So break of structure occurs in the market the exact moment price creates a new high or price creates a new low. So that exact moment the price breaks above a previous high or a previous low is known as what? Your break of structure. So what this means is these are previous high, right? Let me write that. These are previous high. And the exact moment price came and broke above it is known as your break of structure. So the more break of structure you see, the more valid the structure is. So without wasting much of our time, let us see what I'm talking about here. All right, so I'm currently on Euro USD and 15 minutes time frame. So I'm kind of in a random place here. So for educational purpose, I'm currently on I think March 25 or so. So what you can see here, you can see a high. All right. So this is a high. All right. And this is a low, okay, which is your most recent low. Okay, that's what we call it. Like I said, check out previous video I dropped on market structure before you watch this, okay, so you can get more insight of what I'm doing here. So you can see that immediately price left this previous low, which is what you can still call your higher low. You discover price got to the previous low first, the high, which is the previous high, and price reacted to it by selling from it like this. Price sold from it like this. All right. So despite the fact that the price touched the line you already marked out, break of structure has not occurred. Okay. So break of structure occur immediately price breaks above your previous high. So immediately price breaks above it, boom, we have a break of structure. So this break of structure in the price now validates this break of structure in the price validates the structure. Okay, validate structure. You can see immediately after that we have our new high. So if you don't know how to identify highs on your structure, I have also put up a video on that. So you can check this video to get the structure. Check out this video now. Okay, the link is in the description. That you're going to learn basically how to mark out your structure in details. Detail. So let's continue. So you can see break of structure, so on and so forth. Okay, that's a low. Okay. So like I said, the break of structure validates your structure. So you can see, despite the fact that price came back and went below our previous higher low, you can physically see that the trend didn't automatically just change and start selling. Okay, price still bought before it sold. So the reason why price bought is because of this break of structure here. So the reason, for price to break above the previous high, there must be a ton of amount of money existing in this level for such a thing to happen in the market. So the reason why the price needs to go back up for selling is because the orders existing here are still remaining. We still have pending buy stop, sell stop, buy limit, and others here. Those are the liquidity. All right. So the liquidity that sponsored price to break above the previous high, creating a break of structure, is responsible for price buying from this level again. So this is why break of structure is very important. Okay. So let us see another reason why break of structure is important. So if you discover now, we had a new high here, right? So price came to the level, but unfortunately price failed to break above the level. So because price failed to break above the level, because we didn't have a break of structure to the upside, what happened? We have a market structure shift. Price change to the downside. I'll be doing a video explaining market structure shift. I've been doing a video explaining it. All right. So let us not make this video too lengthy. So let's divert to downtrend structure. So what you can see here is a downtrend structure, and as you can see, we also have a break of structure to the downside. Here is a break of structure, and that is why we have a new low. A new low. So the more break of structure you see, the more valid the structure is. So it's a downtrend structure, and you can see price keeps on creating more lows. So in conclusion, the structure is said to be valid if you create a series of breaks of structures. All right, and the validity of a structure is a break of structure. All right. So like I said, check out these two videos to understand how market structure works in the market, and also check out this one to learn how to physically mark out your structure in the market. Thank you.